Business Day TV. I'm David Olujinmi, your host. And before we go into what's been going on in the market, we start with some business news making the rounds. We're starting with the Director General of Nigerian Communications Satellite Limited, or known as NIGCOMSAT, Jane Egerton Idenhe, has announced a bold projection of $3 billion in average annual revenue. As the company, the agency is intensifying its efforts to reposition itself as a key player in the digital economy. Speaking at the Devs in Government MDO Workshop Series in Abuja, she emphasized NIGCOMSAT's shift beyond traditional broadcasting to explore new revenue streams and deliver innovative connectivity solutions. Then Idenhe noted that extending products lifecycle and increasing awareness of NIGCOMSAT services would be critical to achieving the revenue goal. The Technical Director of Technical Services, Abiodun Atta, also revealed that NIGCOMSAT has partnered with mobile network operators to carry 2G, 3G, and 4G in underserved rural areas, marking a significant departure from the agency's previously government-focused operations. The workshop that was sponsored by the Galaxy Backbone and the World Bank spotlighted NIGCOMSAT's transformation with its infrastructure and enterprise focus. The agency is now a major enabler of Nigeria's digital future. Then we move on to Dangote Cement, that is announcing plans to commission its 3 million tons per annum grinding plant in Côte d'Ivoire by the third quarter of 2025. A move that is expected to reinforce its African presence and boost regional exports. The CEO of Dangote Cement, Arvind Pathak, in a note to NGX, highlighted an 18.2% increase in clinkers exports from Nigeria, with 18 shipments to Ghana and Cameroon, underscoring the growing relevance of the company's Pan-African strategy and commitment to regional trade. Pathak reaffirmed the company's strategic focus on long-term value creation and cost efficiency. He reviewed the phased delivery of the 1,600 CNG powered trucks, aimed at significantly reducing logistic costs and improving environmental sustainability. Then, commenting on the company's financial performance, he stated that the group's EBITDA grew by 41.8% to 945 billion, while the group's profit surged by 174%, reflecting strong operational efficiency and disciplined execution. Dangote Cement, which is Africa's largest cement producer, has a 52 million tons per annum capacity across the continent, including 35.25 million tons per annum in Nigeria. The company has facilities in Obajana, Kogi State, Ibeshek, Ogun State, Boko in Benue State, and Okpela in Edo State. The company has transformed Nigeria into a net exporter of cement and clinker, serving countries across West, Central, and East Africa. Then to Seplat Energy, the upstream energy company has reported an outstanding performance in its unaudited half-year 2025 results, as its revenue surged to 2.167 trillion from 5.575 billion in H1 2024. Gross profit soared to 751 billion from 247.5 billion year on year. Production averaged 134.492 barrels of oil equivalent per day, a 178% increase, surpassing 2025 guidance midpoint. Operating profit rose to 601 billion naira, and cash generated from operations hit 1.188 trillion naira, reflecting strong operational efficiency. The company delivered a robust production performance, which solidly reinforced the final year 2025 guidance, supported by strong earnings before interest, taxes, depreciation, and amortization of 1.139 trillion, up from 364 billion in H1 2024. Offshore and onshore operations posted robust growth, with 25.9 thousand barrels of oil per day added through idle well restoration, and carbon emissions intensity dropped to 26.7 kilograms of CO2 per barrel of oil equivalent. Seplat achieved over 15.3 million man-hours without lost time injury, and the Anno gas plant began live hydrocarbon commissioning in July. In dollar terms, the company's revenue hit $1.4 billion, with adjusted EBITDA at $735 million. Net debt dropped to $676 million, following a $100 million repayment. Seplat declared a 4.6 cents dividend per share, reaffirming 2025 guidance, and looks ahead to its capital market day on September 18, 2025. Nigeria's leading FMCG giants. Then we move on to Nigeria's leading FMCG giants, BUA Foods, that posted an impressive 101% year-on-year growth in profit before tax to 276.1 billion naira for the half year ended June 30, 2025. According to its unaudited financial results filed with the NGX on Wednesday, the company reported a 36% increase in its revenue to 912.5 billion naira, this was buoyed by solid performances across its core product segments: sugar, flour, pasta, and rice. Particularly remarkable was the 2,923% surge in rice revenue, highlighting the success of BUA's foray into Nigeria's local rice value chain. Its gross profit went up by 55% to 339 billion naira, and its gross margin improved to 37.2% from 32.4% in H1 2024. Earnings per share nearly doubled to 14.45 from 7.27 naira per share. Operating profit also climbed 41% to 284.8 billion naira, and on the balance sheet, total assets grew to 1.33 trillion naira, and equity rose by 60.6% to 689 billion, reflecting a strong financial position. The managing director of BUA Foods, Engineer Dr. Ayodele Abiyoye, said that the result reinforces BUA's operational efficiency and resilience. He emphasized that the company's focus on affordability, scale, and value delivery amid macroeconomic headwinds, with ongoing investment in backward integration and manufacturing, are driving long-term sustainable growth and regional food security. Then we'll move on to National Salt Company of Nigeria, NASCON, a subsidiary of Dangote Industry, a company that is focused on salt refining and production, reporting a 222% year-on-year growth in its profit after tax, hitting 15.6 billion PAT up for the 6 months ended June 30, 2025. This is a significant uptick from the 4.8 billion reported in the same period last year. Surge was driven by strong revenue performances, improved cost management, and increased investment income, according to the company's Q2 financial statement. Revenue rose by 55% to 78.2 billion naira, boosted by higher sales volume across its salt and seasoning lines and pricing adjustments in response to inflation. Gross profit grew by 70% to 37.4 billion, while operating profit nearly tripled to 21.3 billion naira. Finance income jumped to 2.4 billion, with finance costs declining by 34%, thus resulting in a net finance income of 1.95 billion naira, up from 33 million in H1 2024. Its total assets jumped by 42% to 101.6 billion, and its cash holding also doubled. Earnings per share surged to 11.54 naira per share, and as of July 30th, the share price is about 99.9 naira, up 162% from the 38 naira it started this year with. And after the break, we're returning to a breakdown of what the market did on Thursday, that's yesterday. On the market yesterday, we saw another uptick as we recorded from July the 1st to July the 31st, total bullish run every day in the NGX. Yesterday, the NGX All Share Index inched closer to the 140,000 mark, as we saw the NGX gain 0.42% to close at 139,863.52. In the first month of H2 of the second half of the year, we've seen the market gain over 10%. Year to date, we've seen the market inch to gain 35.89%, officially outperforming its 2024 performance. Total traded volume, we saw 1.109 billion shares traded in deals worth about 33.65 billion naira, and our market cap 88.425 trillion naira. Amongst our top gainers, we saw full bid on Wema Bank, which gained 10% to close at the share price of 22 naira. So UACN also go up after the news of its acquisition of Chi Limited It went up uptick of 10% to hit 18 naira 30 kobo. Then we move on to Guinness. We saw its share price go up by 9.96% to hit 117 naira, one of its highest share price levels since 2018. Then we saw the same thing. We saw a significant uptick in Skyway Aviation Handling Company, 9.95% gain to hit a share price of 90 naira. Then Micure, 9.69% gain to hit a share price of 15 naira 85 kobo. Amongst our losers, we saw NIGCOMSAT Insurance down 10%. We saw full offers on most of the top losers of yesterday. NIGCOMSAT down 10% to close out the share price of 11 naira 70 kobo. Len Africa PLC, the publishing company, was also down by 10% to close at the share price of 6 naira 30 kobo. FTN Cocoa Processors was down by 10% to close at the share price of 5 naira 67 kobo. Then we saw similar thing in the Initiates PLC that has been one of the top gainers of 2025. It went down by 10% to hit a share price of 13 naira 50 kobo. And Ikeja Hotels also went down 9.96% to close at the share price of 20 naira 80 kobo. Our top traded stocks of yesterday was led by FCMB, as we saw about 121.5 million shares of FCMB traded in deals worth about 1.22 billion naira. Universal Insurance also 91.547 million shares in deals worth around about 72 million naira. Universal Insurance has been one of the top traded stocks for this week. We've seen the performance of that. We've seen a lot of action on that particular penny stock on Thursday, on Wednesday, on Tuesday, and even on Monday. Fidelity Bank saw 81 million of Fidelity Bank shares traded in deals worth about 1.7 billion naira. Regency Insurance Company, we saw Regency Alliance Insurance. We saw significant trading volume on Regency Alliance Insurance, as we saw 64.530 million shares in deals worth about 52 million naira. Then Royal Exchange, 47.123 million shares in deals worth about 79.549. So we saw a lot of action taking on our penny stocks in the market yesterday. Now we'll move on to the global market index, where we see Dow in the US. We saw just about 12 noon in the US, about 12 noon Eastern Standard Time, we saw Dow Jones slight uptick, less than 0.01%. So it was basically a flat movement. Then we saw S&P index up there 0.50%, slightly ticking up to the 6,400 mark. This is just less than a month after hitting the 6,000 mark. Then Nasdaq Composite solidly in the 21,000 region, almost gained 1 percentage point to close at 21,327 points. The earnings results that has been responsible for a major uptick in the Nigerian market is also responsible for a major uptick in the US market, as we've been seeing quite a bit of bullish action on the US exchanges, on the US stock market. In Asia, the Nikkei 225 went up by 1% on Thursday to close at 41,069 points. Then the Kospi index down marginally 0.28 points, 0.28% to hit 3,245. Then the Hang Seng index of Hong Kong was down by 1.60% to close at 24,773 points. Then in Europe, it was also a mix. It was basically not a mix, but we saw bullish action, bearish action, beg your pardon, throughout. From the UK, there was a marginal decline in the FTSE 100, which is the benchmarks, which is the flagship benchmark of the London Stock Exchange, down 0.05%. We see the FTSE at 9,132 points. In France, down 1.14%. The CAC 40 is down was closed at around 7,700 points yesterday. Then in Germany, 0.73% decline, as the DAX index was closed at just above, just slightly above the 24,000 mark. And on the currency side, not much of an update. We've seen the naira hover at the 1,530 region against the dollar. However, against the euros and against the pounds, it rallied significantly. Against the euros, it went 1,753. On further days, we've been seeing it hit 1,800, 1,770. However, against the British pounds, it went up significantly from 2,060 at the start of this week. Yesterday, the naira closed against the British pounds 2,024 naira. And that's all we can take on market updates. And after the break, we're going to be returning with a breakdown of Nigerian companies. We're going to be returning with a review of earnings results seen so far in the Nigerian investing space. Stay with us. Over the past 2 weeks, we've seen a lot of results, earnings report from the first half of 2025 dropping on the NGX. They've been dropping like water, basically, and that's what's expected when we get into mid-July, which is like the end of the first half of the year. So we've seen Dangote Cement, we've seen all of the big cement players drop, we've seen all of the brewers, save for international breweries, to drop their earnings results for the half year. We've seen First Bank lead the way amongst the bank. We've seen First Bank, Sterling. Amongst the consumer goods, we've seen from Nestle, we've seen from UAC, we've seen from Cadbury, we've seen from quite a number of them. So we are going to be having a brief review of some of those results before we go. But before we do that, let's go back in time to our show on Monday. On Monday, I had a discussion with Matilda Adifalujo from Mary Stem, and we reviewed Dangote Cement's H1 2025 performance. We're going to just play a short clip of what was discussed that day, then we'll come back to the show. Stay with us.
I mean, like you've highlighted, the profits that that they currently have is quite massive, and the core drivers, I would say, they had some level of margin resilience, not just top line expansion, but the big thing that we are seeing now is their pricing. They were able to massively do some things, or reduce their costs, the cost that they normally incur. So particularly we have in Nigeria, where their ex-factory prices, held firm despite softer volumes. So we saw some an interplay of price adjustment and how it helped in terms of reducing costs. Also you'd see that their production costs also inched like very marginally by 2.4% year on year. And which is actually, if you ask me, I would say it is quite remarkable, especially in this inflationary environment. There was also FX management. They were also able to, instead of the 103 billion FX loss that they had last year, they had FX gains this time around. And for the first time, I don't know in how long, can't remember, I have to look again. But it's quite impressive that they were able to move from a place of FX losses to gains, and the fact that we have a relatively stable exchange rate environment is also a key driver. So this time around, we're able to take some form of pressure off finance costs, which dropped massively. So yes, I would say that their pricing helped, but most importantly, operating efficiency and some level of balance sheets clean up was able to help drive their earnings this time around.
Okay, so now the question is, we've seen that they are in full year 2024, they hit a net income, profit after tax of 503 billion. By H1, they already hit a net income of 520 billion. So basically, do you think, how does this performance, how does it influence your expectations for FY 2025? If you ask a layman, the layman will probably just say that means they are going to probably hit 1 trillion net income by the end of 2025. Or what are your expectations basically for the company at the end of this year?
Yeah, largely in line, seeing that they've already matched their 2024 full year profits by June. And Q3 is usually for cement players, Q3 is usually their strongest quarter because it's dry season, so there's a lot of construction. So I would say that the upside is still very much on the table. So I believe that if they can hold this line on cost and also get some much more optics on their volumes in this second half, we are looking at one of the strongest full year earnings prints that we've seen from them in recent history, right? So I believe that if they're able to just consolidate some of the things that there are the strategies that they put in place this time around. Also, I would say that the risk would now lie in if we see a dramatic reversal in FX. Maybe there is a sharp depreciation, or the monetary authorities now decide to do a devaluation, which I do not see on the table, or maybe there is a disruption in terms of energy supply or even energy costs, with all of these tariffs flying around. So if we see some major reversal, I believe that they are on the way to even stronger earnings in 2025 full year. So we are looking at strong upside to what they had in 2024. And also I believe that this in a way opens up room for a higher dividend payout this time around. I'm looking at between say 40 to 55 naira.
So now you're speaking the language of investors.
I know, right? So it's expected that this will also drive them to pay higher dividends, and to entice investors to do more. So it's really hard not to stay bullish on Dangsem.
Now you answered, you made mention of some of the risk factors that exist, some of the factors of potential energy costs. But I think with the arrival of that,
like you've highlighted, the profits that that they currently have is quite massive, and the core drivers, I would say, they had some level of margin resilience, not just top line expansion. But the big thing that we are seeing now is their pricing. They were able to massively do some things, or reduce their costs, the cost that they normally incur. So particularly we have in Nigeria, where their ex-factory prices held firm despite softer volumes. So we saw some an interplay of price adjustment and how it helped in terms of reducing costs. Also you'd see that their production costs also inched like very marginally by 2.4% year on year, and which is actually, if you ask me, I would say it is quite remarkable, especially in this inflationary environment. There was also FX management. They were also able to instead of the 103 billion FX loss that they had last year, they had FX gains this time around, and for the first time, I don't know in how long, can't remember, I have to look again, but it's quite impressive that they were able to move from a place of FX losses to gains, and the fact that we have a relatively stable exchange rate environment is also a key driver. So this time around, we're able to take some form of pressure off finance costs, which dropped massively. So yes, I would say that their pricing helped, but most importantly, operating efficiency and some level of balance sheet clean up was able to help drive their earnings this time around.
Okay, so now the question is, we've seen that they are in full year 2024, they hit a net income profit after tax of 503 billion. By H1, they already hit a net income of 520 billion. So basically, do you think, how does this performance, how does it influence your expectations for FY 2025? If you ask the layman will probably just say that means they are going to probably hit 1 trillion net income by the end of 2025. Or what are your expectations basically for the company at the end of this year? So on Monday we talked about Dangote Cement. All our attention basically focused on Dangote Cement. But today we're just going to be we're going to be juxtaposing Nigeria's giant cement makers. We have Dangote Cement, BUA Cement, then we have Lafarge Africa or WAPCO as is known in some quarters. Basically, when you look at their revenue, you see that according to what's going on your screen, you see that Dangote Cement has a revenue of made a revenue of 2.07 trillion. When compared against BUA Cement and Lafarge, we see that it's a huge leap from what others made during the year. We see BUA Cement with a revenue of 580 billion, just slightly above a quarter of what Dangote made. Lafarge also 517 billion, is slightly above a quarter. When compared to H1 2024, you see that across the board, Dangote, BUA, and Lafarge, we've seen significant growth in revenue, sales for both companies. And you look at their gross profit for the year, we see gross profit, we see Dangote with 1.2 trillion, we see BUA with 286 billion, and Lafarge with 296 billion in terms of gross profit. On the screen, I also give a breakdown of the gross margin, and we see Dangote Cement leading in terms of gross margin. Gross margin is basically the gross profit all over just against the revenue. That's the percentage of the percentage of the revenue that was retained as gross profit. We see Dangote leading in that aspect also. We see Dangote leading with 59%. Dangote's cost of sales just slightly upticked in H1 2025 by 2% from H1 2024. A phenomenon that has got market watchers really perplexed, because it's wonderful how they were able to maintain such a small growth in their sales costs between last year till this year. And for BUA, you see the gross margin at 49%. It's not bad, but when compared to Dangote, that's a 10 percentage point gap. You see the same thing. However, for Lafarge, it's very impressive also, 57% gross margin. So in terms of gross margin, we see Dangote leading the chart. When it comes to revenue, comes to profit, we basically have to give it all to Dangote, because Dangote is by far a bigger, in fact, in Africa, in sub-Saharan Africa, Dangote is regarded as the largest cement producer. It has factories and plants across 14 African countries, and we just announced that they have a plan to start a new one in Côte d'Ivoire. So it's a large scale operation compared to BUA and Lafarge that are just Nigerian-based companies. Dangote has about 10 million tons of production capacity in South Africa, Congo, Democratic Republic of Congo, and the like. So when it comes to the numbers, you see that Dangote leads. However, where you can now position Dangote against others is when it comes to the margin and the ratios also. So in terms of operating profit, Dangote is more than quadruples whatever we have from Lafarge, and more than triples what we have from BUA. BUA has a operating profit of 245 billion, and for Lafarge it was 192 billion. And in operating margin, we see Dangote also still leading in terms of operating margin, 39%, and BUA 42%. Lafarge, however, in terms of operating margin, I beg your pardon, BUA climbed up in that aspect. BUA had an operating margin of 42%. Then Lafarge had an operating margin of 37%. Across board, relatively across board, when compared to other sectors of other companies listed on the NGX, super impressive. However, when juxtaposed against each other, we see BUA leading in this aspect. Profit before tax, the pre-tax profit, we see Dangote also giving up some very significant numbers. And something very interesting about the profit before tax is the fact that for Lafarge, it's 200 billion, it's more than its operating profit of 192 billion, as the company recorded significant finance income of about 10 billion naira. The company's income from its fixed deposit accounts, and it had basically the company put some money into some, basically the company invested in some financial instruments that made it income during the half year. In terms of profit before tax margin, in terms of its pre-tax margin, we see that on this scale, Lafarge now begins to lead. Lafarge leads with 39% as against BUA's 37%. Dangote slightly declined on this in this aspect, so 35%. Total assets, Dangote also leads with 6.6 trillion naira against BUA's 1.6 trillion naira. Then for the first time, Lafarge's total assets went up to 1 trillion naira. And in terms of current assets, we see Dangote up by 1.98 trillion naira. More than, like I said, more than quadruple the current assets of BUA and Lafarge. BUA and Lafarge had relatively 460 billion and 408 billion. Where this begins to make a lot of sense is in the fact that you have something called a current ratio. A current ratio, mathematically or academically, is the ratio of the current assets against current liabilities. It's a measure of how much of a company's current assets can be used to pay off its current liabilities or can be used to settle its short-term obligations, which are its current liabilities. And for all three of them, when you juxtapose them against other players in Africa, across the world, and even on the NGX, we'll say they posted relatively impressive current ratios. Dangote 0.74. Dangote is a big industry, it's a big company, it's a big machinery. BUA had 0.93, but very impressive was Lafarge that had a current ratio of 1.04. When you look at the progression, you discover that from this point you begin to observe where Lafarge kind of trumps others in the market. Dangote is a way bigger company. We've already established that fact, that Dangote is way bigger than whatever the rest of them could be, than whatever the rest of them are right now. However, when it comes to operational efficiency, the ability to convert its assets into revenue, we've seen Lafarge demonstrate some level of, even more impressive is the fact that in H1 2025, Lafarge took on no new borrowings, basically financed all of its working capital from revenue, from its internally generated revenue. In terms of asset turnover ratio, we also see that efficiency in display. We see asset turnover ratio, which is basically the ratio of the total asset or the net sales of the company against its total assets. For Dangote, it was 0.31. For BUA, 0.36. Basically, what this means is that for every 1 naira asset that each of this company owns, for Dangote, for every 1 naira asset it owns, 31 kobo of it is converted into revenue. It is impressive, right? For BUA, it's 36 kobo converted. However, for Lafarge, it was 50 kobo of its assets converted into revenue. It has demonstrated the ability to sweat its assets the most. And analysts will use that term, they'll say sweat its assets. Asset sweating capacity. When it comes to asset sweating capacity, we see Lafarge on the, so what this means, we can't really say if asset turnover ratio will see Lafarge. Maybe when Lafarge becomes a much bigger entity, we'll be able to, but just by the face value, with an asset turnover ratio of 50 kobo for 1 naira of asset, this means that if Lafarge had the same volume of assets that Dangote had, this is just a very layman's analogy. We are not taking into consideration all of the factors that affect production and all of the geographical, considering the fact that Dangote operates across various markets. And so basically, but just on a layman's level, very surface level, if it had the same amount of assets that Dangote had, it means that Lafarge have the capacity to probably be generating as much as 3 trillion in revenue, as much as 3.2 trillion in revenue. Then it's net operating cash flow. This is where we see Dangote also trump everybody. net operating cash flow, Dangote had a net operating cash flow of 874 billion naira. That is a lot of cash. A lot of cash. Then BUA Cement had a net operating cash flow of 150 billion, and for Lafad it was 83 billion naira. Then let's look at the free cash flow. The free cash flow is when you have taken out the sum used for capital expenditure during the period. So the free cash flow, we still see Dangote at the top there, 711 billion of free cash flow at the end of H1 2025. BUA Cement had a free cash flow of 134 billion. And for Lafad, it was 54 billion. For each of these companies, this is way impressive figures. This is cash flow that can be used in investing, that can be used to finance working capital for the remaining periods of the year. And that's all we can take on a very short review or short summary of what these three companies have done in H1 2025. And that's all we can take on the show this morning. We're well out of time. Thank you for sticking with us on Economy and Markets. I'm your host, David Olujinmi. See you on Monday.